Hey, listen. Happy Cinco de Mayo. All right. I was told it was Cinco de Mayo. Listen, either way it goes, it was going to be shots clock for me. Listen, it was a good day in the market for my long-term portfolio. Some much-needed green. Obviously, we knew the tomfoolery was going to come on our AMC play. This was nothing. I'm not even phased. Obviously, we could tell correlation with how many synthetics they had to produce today just to do this little stupid play around on the earnings that we beat. But nonetheless, that changes nothing. But first, before we get into anything, I think we need to take a shot, guys. Listen, what a time to be alive. What a market to be buying in. What a play to be a part of. And then the fact that we got timelines, guys. Let's celebrate our victories. People, you can't get bound up in one day and let it. Guys, hey, we were at 470 last month. Hey, shot. Okay, that's a bit too much. I got to still hit the gym. But as y'all know, my favorite sponsorship. Hey. All right, let's get down to it. Cheers. Salud. Oh, yeah. All right, let's get down to it, guys. I got 2 clips to show y'all. These are 2-minute clips, so it'll be about 4 minutes of video. Then we'll cover, some more keynotes from AMC today. And we'll take it in that weekend, guys, to get a little obliterated, guys. It's Cinco de Mayo. You hear me? This ain't just no Mayo. This is Cinco de. You hear me? All right, come on now. All right, let's get down to it.
Solley watching the market for us this morning. Strong jobs report. Markets going up. Are we off to the races on Wall Street?
You know,
the sentiment. Listen to the sentiment of big money.
Days. And I'll say the positive reaction to this jobs report, to me, is the massive revisions downward. So if you take the last 2 months with the revisions that came in, they're roughly 30% lower. Right. So
okay, now we didn't report that. We didn't get into that. We just get the latest numbers. But you're telling me that in the previous 2 months, they revised down the number of jobs added. 30%. Okay, 149,000 jobs that they said were created in the last 2 months were not. I suspect the same thing will happen when we get the final number for this, which means this job growth is slowing. Okay, wage growth is still coming along, but that rate of change.
Because you'll notice they were trying to come out and say, oh, yeah, jobs beat was the reason that everything went up. But realistically, with the amount of jobs that were lost compared to what they created, it's still slowing.
Change for the wage growth is slowing.
But they're cheering like this is woo.
Yes. That's why I think you're seeing a positive reaction to the market. First, Apple earnings, which we'll hit on, was pushing the market
Apple
higher.
Earnings.
This jobs number took the Dow from up 130, 140 points, almost up 200 points.
But it's not going to last. Why not?
Because we have a massive bank contagion on our hands that's not going anywhere.
Hello.
Okay.
Thank God.
That's still with us, and that's going to hurt the market down the road.
And so is May 9th, right? Next week when you have the big 4 meeting about the debt ceiling.
Hey, just notice how that banking thing, they just somehow, oh, yeah, that was good. Guys, how did they sit up here and act like the bank didn't just collapse yesterday? Like PacWest wasn't just 2 days ago. The way that they like to cover this shit up where it's, no, hey, don't talk about it. God, what the hell? Guys, what do you mean, why is that? Because the damn floor's falling from up under you.
The markets too. Are they going to negotiate, or are we, going to head down and off the fiscal cliff again?
Okay, I've got to move on to another subject, but we are saying we're not off to the races at this point.
Absolutely not.
But is there a huge decline coming? Some of our analysts are saying so.
I think at best, we're going to be flattish until this banking situation gets resolved and the Fed pivots.
He said at best that we'll be flat.
At worst, you could see a 10 to 15% decline. I don't think the bottom's going to fall out, but I do not think we're off to the races.
There's a dip. It's not time. It's not time for it to run. This is time for you to load up.
Much cold water on
all this big money back here. While he asking these questions, he's loading up on Tesla.
This morning so far, but
he knows what do you think that it's not going to run?
Mike Lee, we'll see you
again later. Of course not.
Thank you, sir.
All right, and then we'll double tap in the video too. Let's get this up here if we can get this out the way. All right. Expert Jacob Susenshine. Hey, interesting name. Issues bold warning a market correction has just begun. As we keep saying.
It's a Friday morning. We've had the jobs report. The investors seem to like it. The Dow's up 200 and the Nasdaq is up 91 points. I'll call that a rally. Look who's here now. The youthful Jacob Sonnenschein joins us one more time to look at the market. Which camp are you in? The camp that says, hey, the rally continues, or the camp that says, watch out, there's a big drop coming?
I think we've just begun a correction, and I think that is, I rarely say that because that's a little, obviously that's a bold thing to say, but when I look at the S&P 500's multiple, when I look at where the 10-year yield is, there's not enough return on the S&P 500. You get to 4,200, you get to resistance. Now you have some economic risks that we're seeing, maybe just a hair in the jobs report. I think there are some risks that the market is going to have to reconcile with before we resume a bull market.
You wouldn't buy any dips?
I actually would, because there's never a 100% chance that anything is going to happen. So on the way down, I think it would be really smart to add more and more on the way down.
Geez, Jacob, you're killing us here. On the way down, we started a correction already. We're all happy. We've got a nice jobs report. It's the coronation tomorrow.
I know. Everything looks pretty good. Here's my problem. The impacts of monetary policy always happens with a lag, and sometimes more than a 6-month lag, sometimes a 12-month, sometimes more.
He's good at playing the part of the
so there's a little bit more
regular ham and egg.
Going to have to reconcile with. As it does that, it's going to
regular taxpayer with no idea what's going on.
To when things can stabilize. Problem is, it's already done that. We need to wash out some of the buyers, and then that'll be a nice opportunity to buy.
At some point, the Federal Reserve will stop raising rates, will pause, and then maybe go down. Is that the buy signal? The moment people think that the Fed's going to lower rates, is that the buy signal?
I think
no,
the buy
signal's now.
It was in October when the S&P.
Guys, the buy signal is now. While people think that this damn thing is going to damn zero, buy the dip. I don't understand why they play around with this. This is not how you invest. It's not how you trade. You do not buy it the moment that everybody's buying in. That's how you get the rug snatched from up under your feet. Right now is the best time for generational wealth transfer. I keep screaming, and we green as bazookas today. Tesla, Nvidia, Microsoft, Apple. I picked up. I'm doing now. This is a different little trade area, but Rumble. I feel like that's going to be a nice little down a long lane, just because I'm seeing how the censorship stuff is working. But Rumble is a good stock to purchase into. XRP, HBAR, Bitcoin, Ethereum. Y'all understand this? This is the time to be purchasing this. We're in the biggest generational wealth transfer ever.
500 hit a low,
and of our lives.
The Fed would pause. Now we're there. I think the Fed is pausing, but now we have to see the next thing that the market has to do. Next on the agenda, economy and earnings.
Okay, we're going to see you on Barron's Roundtable on Fox Business this weekend. Thanks for joining that.
All right. A good clip, just so y'all can see the sentiment. Guys, it's a wasteland in the market. It's a wasteland in the economy right now. But it's either you're going to be destroyed in 2023 or you're going to come out on top of 2023. And that's all based upon the moves that you make. If you get fearful and you think that right now, if you aren't running in, trickling off 100 here, 200 here, 300 there, buying up some Tesla right now, 160, it's all right, brother. It's all right. Hey, you know I got love for you. Much love for you. But that yacht, hey, it's all right. I'll take 2 then. I'll have the XL then, since you don't want yours. But this is the time to be investing. This is what investment is. This is what a trade is with AMC, then investing, which is something that you can put it away. Boom, boom. All right, I know this is going up. All right, coming back in, looking at our price move today at AMC. This is full malarkey. Unrealistic price move. Like I said, I'm unfazed. One thing I am stoked about is the fact that we did hit 620. Like I said, that movement going from from where we are, like I said, just so everybody can see just again where we were just 2 days ago. Down here at 540. Let's see down here. 540. Almost, what is that? More than $1 away? No. Well, that was it. What was that? What's that? 540. Oh, well, when we hit 620, we were almost $1 up from where that was 2 days ago. And if you pull out even further, and we go down to the start of this month, we were at, where are we at here? What is it, about 548? So we've been around, basically trading sideways and uptrending. But is it supposed to be something that I'm supposed to be shaking from? Because for y'all, especially for this to have come through, 2.8 million shares magically whoosh, appears in here. And of course, they've gone through what, 30 million shares, 25 million shares today for you to do this. Hey, I'm sorry, guys. I'm just going to tell you, I'm just not fazed by this. And I said the same thing last time. We come into the next week blowing up out the banjo just because, like I said, one, they couldn't let it. I said that in the video yesterday. I said if they let this thing close green through earnings, it's over with. The FOMO would just be detrimental coming in on Monday. They had to put everything they could to make this not close above where it was. But the simple fact is, guys, today we hit 620. I told you what happens when we hit that 640. What is that, 646? Let's come off this auto and see what that level is. 646. Hey, that's off to the zoomies again. I'm just telling y'all guys, we're very close to a snatch out. They haven't done enough for me. That's not, I mean, there's nothing that you should be shaken from. This should not have disturbed you today. I'm just telling you, y'all should be getting ready for your El Cinco de Mayo. This price movement was bogus. Jalopy. But nonetheless, double tapping in. Shortage is still sitting at 26.62%. We want 27. Give it to us, you lying bastards. Days to cover is 6.82. So I think it's down. Yesterday I think it was 6.88. 6.82. We've been juggling in the same range. Nothing's changed. We've been trading sideways and slowly uptrending. This back here, the numbers of this are malarkey now at this point. So y'all were borrowing. You borrowed 3 million shares of 170%, 186%, 186%, 186%, 183%. And then all this left now is 2.8 million of what you utilized. And there was no price correlation in buying. Of course, those shares were bought, right, or borrowed, but there was never any buying price action. I mean, how do you borrow something if the person that you're borrowing from has to have the shares and they're buying them? Who's selling them? You know, that's, hey, y'all put two and two together and tell me if you think this was synthetic or real price movement. Guys, we had our AMC earnings report. Just like I said, y'all take a pause of this and y'all can review over this. But and also keep in mind, guys, CPI reports is going to be on the 10th of this month. So in 5 days, we have our CPI report. Get ready for the market to get stabbed in the side again. But here we go. Summary of the first quarter 2023 compared to 2022. Total revenues grew 21.5% to $954.4 million. Net loss improved from $101.9 million to $235.5 million. Okay. Adjusted net loss was $179.9 million compared to an adjusted net loss of $266.3 million. So the amount of money that they're losing is going down again. Now, guys, I want y'all to keep in mind, this is no Tesla. This is no NVIDIA. Like I said, we're cheering on because they're beating the expectations. They're still in a bad bind. Without retail, this would be a skeleton. Diluted loss per share was 0.17 compared to diluted loss per share of 0.33. So obviously they're saying that it's diluted loss per share was a 0.17. Obviously, if you hadn't have done 8, it would probably be way better than that. But nonetheless, hey, adjusted diluted loss per share was 0.13 compared to adjusted diluted loss per share of 0.26. Let's see here. Net cash used in operating activities for the quarter was $189.9 million. Non-GAAP operating cash burn for the quarter was $139.4 million compared to $223.9 million. These numbers are, seems like the same ratio on all these categories that is kind of beaten by. Basically, they're shaving off $100 million off of the cash burn. They shaved like $100 million off of net loss. Yeah, they shaved $100 million off of adjusted net loss. Let's see here. Available liquidity for March 31, 2023 was $703.7 million, including $208.1 million of undrawn capacity under the company's revolving credit facility. So basically, they're saying that we have about $900 million dollars worth of cash that is sitting up there, at what AMC. Hey, that's great. Hey, it's good for us to have a good cash position, but what's our debt? Do they have that down there? All first quarter North American box office. Okay, no, this is how much that the box office brought was 1.7 billion. No, I think the debt, I think we're at like $3 billion worth of debt or something like that. But like I said, nonetheless, hey, coming up on $1 billion cash, we're not about to complain about it. All this, though, nonetheless, is relevant for us. I am, like I said, it's great that we're destroying the short thesis, but I'm here for a short squeeze. You hear me? And this is all great and dandy, but that don't have nothing to do with the fact they got all these synthetics that they have boxed up and tried to use to smush down the price, and now their lenders, their ammo's getting snatched, and they're getting squeezed from both sides, from retail and financial. That's what I'm here for. And like I said, this was a piss for everybody you can. And I want you to keep playing around because, like I said, on the 12th, I got a little reloading coming in. So, like, hey, I'm not tripping off of it. But like I said, I had expectations of this. They couldn't let it close a green after running up, 4 days in a row, 3 days in a row, and then into a close of the weekend and on earnings beat. Oh no. That thing would have clipped up to $7. But nonetheless, hey y'all, listen. Much love for all the support, guys. What a time to be alive. What a time to invest. Y'all go check out my Tesla. I have a Tesla video that I posted a long while ago. One, that needs some love, but two, it's kind of just a reminder of what's to come with Tesla. So, like, if y'all are kind of trying to figure, oh, hey, you seem like a Tesla fanboy. Oh, yeah, I am. And there's so much to come with Tesla. That is a hell of a stock to be looking at. And the price of these stocks right now are steals. We're in Dollar General with it. We're in Dollar General right now. We're in Walmart Supercenter. We're in Sam's Club. You can bulk up. Just don't forget this stock was $1,000 a year ago. And this is at a stock split right now. And you got all this little financial distress is giving you buys in the hundreds. Okay. I can't make you do nothing. I'm no financial advisor. Hey, I'm not your daddy. You hear me? Hell, you might not even listen to your dad. Nobody can make you do anything. But all I can do is give you some suggestions. Like I said, hey, I would like for y'all to have a yacht next to mine. You could be on this side. A couple of y'all can be on this side over here with a lady in every flavor. Ooh. Guys, hey, listen, we set up for financial freedom. Much love to y'all. Y'all hold it down. We gonna come back with some more videos. If not, Saturday we'll be in that thing on Sunday. Much love to y'all. Hey, happy Cinco de Mayo. Yes, sir.